Welcome back to another trade recap on the Silicon Trading channel. So I want to go over the Euro USD longs that we took today that netted us 2% and show you guys exactly what I was thinking, what I was looking at, and hopefully you guys find some value. So let's get right into it. Euro USD chart, we're looking at the weekly time frame. One thing I was looking at this morning, I'm going to zoom in a little bit more because I realized on my last video it was kind of hard to tell because I was so zoomed out. So let me zoom in. One thing I've been looking at is the downtrend, as kind of covered in my last video. But interestingly, what we have going on from here, from this low to this high, we're coming back and we're right at this kind of crucial point, this 78.6 retracement. I love 78.6 retracements. I think not a lot of people talk about them. Everybody kind of talks about the 61.8, maybe the 38.2, but personally, 61.8 is great, but 78.6 is ideal for me because that gives us the best risk to reward, whether it's a long or a short. You know, risk to reward is all the way up here. Stops are usually somewhere in between here, if not down here. Obviously, this isn't a real trade, so these aren't, 190 pips. That's not realistic. This is a weekly time frame. But anyways, we're looking at the 78.6. The week is still going on. So right now, it looks like a very bearish candle. But for all we know, by the end of this week, this candle could just be a long wick. And this candle might even turn bullish by the end of the week. We don't know. This is just what we're seeing and kind of what I'm keeping in mind as I'm going down into the lower time frames. So let me get rid of that. Yesterday's candle closure was extremely bearish, big bearish candle here. So that was something I noted this morning. And one thing I actually look for on the daily chart is looking at these lows and these highs and kind of seeing which lows and which highs have been cleared as far as liquidity and how we're doing on that aspect. I'll probably make a video later on how to look for liquidity. A lot of people call it the bank trading method, or what banks are looking at, and stuff like that. But so far, we've tested all these lows. We've cleared this low. We've cleared this low. As you guys can tell on this side, cleared this low. We've just cleared it yesterday. And so far, we have this kind of area, this low down here, which hasn't been cleared yet. So on the weekly, we're at a 78.6. So this could possibly not clear this low and, kind of start coming back like this and then just making its way up. Possibly. I don't know. Or this could actually invalidate the 78.6 and continue to trickle lower, clear the low, and then who knows, maybe just keep on going down. We don't know. That's a long time away, but still things we're keeping in mind. So we cleared the low. There's still another low we could possibly clear. So keeping all this in mind, we go down some more. So let me zoom in here. So 4-hour time frame. Yesterday, we got some shorts all the way back down. And interestingly enough, this morning, there was a huge bullish candle, a 4-hour bullish candle here. And that was very interesting to see overnight. So besides that, there's nothing really else here. I have a little zone up here. I guess you could call it like a demand zone, which I'm still interested in. This could be a potential nice trade here, little zone. We got a 61.8 right above. I could possibly see this going up and then some manipulation here and then taking the short, even though this is pumping down really, really aggressively right now. And I'll show you guys why this is pumping down so aggressively. But this was something I was also keeping in mind this morning. Just something else to note. All right, so after looking at the weekly, the daily, and the 4-hour, we know we have a couple things in the back of our mind. On the weekly, this could just rip up, which seems like that's what it did last night during the London session. It just ripped up, so we're keeping that in mind. daily and 4-hour are still on the downtrend. So we know that the smart trade is to short the euro, but at this moment in time, it looks like the volume is to the upside. So it would be what you call a counter trend trade. So personally, I don't really execute counter trend trades unless they're very solid and I use them as a hedge trade against my main trade or my main bias, which in this case is short. So knowing where we are, we know we might execute a counter trend trade. What does that tell me? That tells me, hey, this is high risk, low probability, so I should probably lower my risk. And that's exactly what I did this morning. So let's start off. Let me unhide this. We started off every day like always when we're scalping or high frequency trading. This is my zone that I showed you guys on the 4-hour chart. Here's our 4-hour QP like we went over in yesterday's video. And here are my intraday scalping levels for today. So we got let me zoom in here. So we got the Asian low, Asian mid, Asian high, and then we have the London high, the London mid, and the London low. So if you guys can tell, like I went over in my yesterday's video, I'm always up around 3:30, 4 in the morning. So my cursor is right at 4 in the morning. So this is the time that I'm waking up. So when I wake up, I come to the charts and I take a look. And as I'm catching up, I see this move kind of to the downside. When I see this move to the downside, I'm analyzing everything. I'm keeping in mind, okay, it looks like today's volume is to the upside. It looks like we might be executing a counter trend trade. So let's see what we can do. So I grab my fibs from Asian low to London high. And looks like at 3 in the morning, the London session came down, tapped the 61.8, and it moved up. It mocked up, and it actually created the London low. So, in my opinion, it mocked up a little bit too early. And if this would have gone all the way, this would have not given an opportunity for the New York session to get in. So instead, what it did was it kind of pivoted back, created this support here. So I had this highlighted here. We came, we tested, we came up, we came back down. And let me show you guys, I'm watching this on the 5-minute. And this right here is 5 in the morning. So it comes down into the zone, gives us this little doji candle, and then a bullish candle. So this is a morning star formation, which means a reversal is here or is coming, but I didn't want to get here. I didn't want to get in here because I still wanted a little bit more price confirmation to let me know that, hey, we're really taking off. We're really going to the upside. So I waited. You know, things kind of messed around, went up and down. And when it came back down into the zone again, I executed the long. So I went long somewhere around here. I think it was right around here. And my stop loss was just about 5 pips. So very small stop loss. And, you know, a lot of people that I've seen on the trading community, they say, wait for this to come back. Wait for this to, you know, reverse or show you some sign that this is going to go back up. But in the past, I've tried that. You know, I've tried waiting. I've tried the 15-minute, you know, kind of wait. But what I've found is that if I have several confluences here, I have a zone, I have a fib, I have price action showing me. You know, I have my my session lows and my session highs. Everything's kind of telling me up, 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 up. So with that alone, it gives me enough confidence to say, okay, here is the best place for me to execute this trade where I get the best risk to reward. If this breaks through, that's perfectly fine. You know, I'm not going to win every single trade and I'll be out for a 5 pip stop loss. You know what I mean? But this gives me the best movement to the upside. And with the movement to the upside, we can target the Fibonacci extensions and target this zone, which we have up here, which was from our 4-hour zone. So with the 5 pip stop loss all the way to the top, this is a 7.46 risk to reward. I'm going to be honest with you guys, I didn't catch the 7.46% because I was looking at this 30-minute. I had this trend line here from this high, and I brought it across. But sometimes what I like to do is go from wick to wick, or sometimes I go from wick to body. So I kind of find the areas where this trend line has touched the most. I want the most touches on the trend line as possible because that means the stronger the trend line. So I kind of had the trend line right around here. So let me zoom in over here. So we start up here, we got some touches here, some touches here. So these are all, it wants to break out, it comes back. Wants to break out, it comes back. Touch. Just shy here, but, pretty close. And then this morning, this is at 1:30 in the morning, it came and it touched and it reversed back. So I figured this is a good general location for my trend line, and this gives me something to shoot for. So going back down to the 5-minute, when I executed the trade, as always, I like to look for my 1-to-1. Where's my 1-to-1? And my 1-to-1 was relatively close since it was only a 5 pip stop loss. So 1-to-1 is here, but I did target this trend line. So once I targeted the trend line, I waited. I just watched this price action. Mop up, mop up. This is kind of like, in my opinion, this is a doji candle, so I didn't take too much importance to it. And what I found is that the market sometimes does this kind of activity to scare the retail trader. This is a kind of like a scary push down really fast. But at the end of the day, it's just a doji candle. Doji, 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 another doji, even though it's kind of hectic around here. And then it mops up and it closes down. I did take a look at this candle here, and I did kind of think about closing the trade, but I was already risk-free and I was monitoring this closely. And then as soon as this mopped up, boom, close the trade. I'm done. I'm happy. Even though on our Fibonacci, we did have an extension, up to these levels, but I knew it was a counter trend trade. I don't really execute counter trend trades, and this could have easily just reversed and wiped me out of the position. It just happens sometimes. So you have to be satisfied with your targets, your risk to reward, and what you want out of it, frankly. And I was satisfied with what I got out of it, so I'm done. Once I got out of the trade, I did, this was relatively early. It's 7 in the morning. I didn't have much else going on, so I did continue to watch the markets and see what it was doing. And, it kind of hesitated here. It tested the back of the trend line as support, and then it just flew. It flew up within 10 minutes. It flew up. Let's see, it was about 17 pips. And it hit precisely the 27% extension, and then now it's pulling back down. So whilst I was looking at this long, I was contemplating taking a short. Let me just clean this up a little bit, and I'll show you guys what I was looking at. So I was looking at taking a potential short, since the short, we know, is the smart trade. This whole market is in a bearish sentiment. So the short is always the smart trade. And nobody knows when the bottom of the market is, just as nobody knows when the top of the market is. So this could, as you guys can tell now, this could just come and plummet some more. But I was targeting, you could see this trend line that we had on our 30-minute and 15-minute. It's not so clean on the 4-hour, but that's okay because it wasn't a 4-hour trend line. It was a lower time frame trend line. So let me just get rid of that. But I was seeing, this 4-hour kind of move from high to low, small high here, and then our low, which we created yesterday. So I did pull a Fibonacci from this high to this low. I saw this zone here, and knowing what I knew from my lower time frames, I said, okay, volume is up, we're gonna push to the upside. But what I was looking at was hoping that this is our zone from the 4-hour. I was looking to execute the trade at the 61.8 and possibly have my stops right around maybe this region, the 78.6, or a little bit higher, because I did think this has a lot of volume coming into it, a lot of retail traders. They're gonna carry this all the way up here, and possibly there will be some sort of manipulation here where here's our zone. Maybe there will be a lot of shorts here from retail, but then with the market, what it'll do is it'll just make another big candle and kind of wipe everything out. Maybe the retail trader will have shorts here, maybe stops right around here, something like that, and target the lows, and then the market will just boom, do that, and then maybe one more, and then end up shooting back down and just maybe leaving a wick up here or something like that. So I always try to think, where can this market be manipulated and what are the possibilities? So I did have a pending order at this level here, and this was going to be, it's based on the 4-hour time frame, so it was going to be kind of like an intraday trade. So my stop was a little bit bigger. I had about a 20 pip stop. And this Fibonacci, obviously the extensions are somewhere all the way down here. And you can see the risk to reward just gets insane. So we were going to target right around this level, 90 pip trade. Risk to reward is about 4.48 or so. So I was looking to execute this trade, but unfortunately, it did come directly to the 27 and just reverse back. So I'm still going to keep an eye on it. You see these big wicks now, so this might mop up one more time, and then I might be able to execute the trades. If I do, that'll be a separate video. But yeah, this was the trade this morning from here to here, counter trend trade, and hopefully you guys can see how I caught the trade, what the mentality was, and everything with it. So if you guys have any more questions, drop them in the comments below. Hit me on Instagram at Silicon Trader. I have a couple more videos coming out soon regarding the Fibonacci and quarter point system, so keep an eye out for those. Don't forget to like, comment, subscribe. I'll catch you guys on the next one.